Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of big business. And today we're diving into a retirement fund report that is as complex as planning your own golden years. But trust me, we'll make it clear. Alright folks, today we are looking at the T. Rowe Price Retirement Fund's incorporated filing for the Retirement Blend 2045 fund. This is essentially a report card for this specific fund, detailing its performance and holdings for the period ending the 30th of November 2025. Think of it like a financial check. Up for your future nest egg if you are invested in this fund. Now, the main reason for this report is transparency. It tells investors what they're investing in, how much it costs them, and how the fund is performing. We're going to cut through the jargon and get to the juicy bits. Let's talk about the money you actually pay for the Retirement Blend 2045 fund investor class. If you had invested $10,000, your costs over the past 6 months would have been around $22. That is about a 0.41% charge. For the I class, that same $10,000 investment would have cost you around $13 or 0.24%. So, the I class is a bit cheaper, which often happens with higher initial investment minimums. These are the fees that nibble away at your returns, so it is good to know they're relatively low here, especially considering this is a retirement fund designed for long-term growth. Now, for the size of the operation, this fund manages a whopping $817,873,000. That is a lot of money working for retirement. It's good to see such a substantial amount of assets under management showing investor confidence. And how are they investing all that money? They hold 23 different investments. This tells us it is a diversified fund, not putting all its eggs in one basket. Diversification is key for managing risk, especially in a retirement fund that should be a bit more on the conservative side. Speaking of how they manage the fund, the portfolio turnover rate is 5.2%. This means they buy and sell about 5.2% of their holdings each year. A low turnover rate like this usually means the fund managers are taking a long-term approach, which is generally a good sign for a retirement fund aiming for steady growth over decades. They aren't day trading your retirement money. Now let's look at where the money is actually going. A big chunk, 66.7%, is in domestic equity funds, meaning stocks from US companies. Then 27.9% is in international equity funds. So stocks from companies outside the US, there is a small portion, 2.5%, in domestic bond funds and even less, 0.6%, in international bond funds. The remaining 2.3% is in short-term investments and other assets. This breakdown shows a clear tilt towards stocks, which is typical for a fund targeting retirement in 2045. They have time for those stocks to grow. Let's dive deeper into what exactly they are investing in. The largest holding at 29.4% is the T. Rowe Price Equity Index 500 fund. This is basically a fund that aims to mirror the performance of the S&P 500, the 500 largest US companies. This is a very common and solid core holding. Following that, we have the T. Rowe Price International Equity Index Fund at 13.8%, again an index fund for international stocks. Then comes the T. Rowe Price Value Fund at 10.1% and the T. Rowe Price Growth Stock Fund at 9.7%. These are actively managed funds that focus on specific investment styles. The rest of the top 10 are other T. Rowe Price branded funds, including real assets, international value, and various index and emerging markets funds. It is clear they're heavily invested in other T. Rowe Price funds, which is common for target date funds like this one, acting as a fund of funds. This table here gives us a snapshot of the fund's financial health. For the 6 months ending the 30th of November 2025, the investor class saw a net asset value increase. Starting at $11.39 per S-share, it grew to $12.94. That is a healthy jump reflecting positive investment activity. Looking at the total return for the investor class for the 6 months ending the 30th of November 2025, it was 13.61%. Over the year ending May 31, 2025, it was 10.86%. These are solid returns for a diversified fund. The higher returns in previous periods, like 22.34% for the year ending May 31, 2024. Show that the fund has had some particularly strong years, which is great for long-term compounding. When we look at expenses, the gross expenses before any fee waivers or reimbursements for the investor class for the 6 months ended the 30th of November 2025 were 0.41%. The net expenses after those adjustments were also 0.41%. This confirms what we saw earlier about the costs. It is encouraging that the net expenses are low and stable. For the investor class, the net assets at the end of the period on the 30th of November 2025 were $166,310,000. This has grown significantly from earlier periods, showing increased investment and likely good performance. Now let's switch gears to the I class. For the 6 months ending the 30th of November 2025, the I class also saw its net asset value grow from $11.38 to $12.94 per S-Hair, mirroring the investor class performance. The total return for the I class for the same 6-month period was 13.71% and 10.97% for the year ending May 31, 2025. Again, these are strong performances, very similar to the investor class as expected since they invest in the same underlying assets. For the I class, the gross expenses and net expenses both stand at 0.24% for the 6 months ending the 30th of November 2025. This is notably lower than the investor class, as we discussed, offering a cost advantage for those who meet the higher investment minimums. The I class is significantly larger, with $651,563,000 in net assets at the end of the period. The growth in both classes is a very positive sign for the fund's overall success and investor adoption. Now, let's get into the nitty-gritty of what this fund actually owns. This section lists all the specific investments. We see a mix of bond funds and equity funds, reinforcing the asset allocation we talked about. For instance, under bond funds, we see holdings like the T. Rowe Price US Bond Index Fund and International Bond Fund. And under equity funds, which make up the bulk of the portfolio, we see those familiar names again: Equity Index 500 Fund, International Equity Index Fund, Value Fund, Growth Stock Fund, and so on. The values listed here show the market value of these holdings as of the 30th of November 2025. It is a detailed breakdown for those who want to see every single holding. The total investments in securities is valued at $818,046,000, which is slightly more than the reported net assets of $817,873,000. This difference is typically due to accrued income or other minor differences that are reconciled in the statement of assets and liabilities. A really important part of this report is the section on affiliated companies. Since this fund invests in other T. Rowe Price funds, these are considered affiliated. The report details the gains and losses from these internal investments. For example, we see that the T. Rowe Price Equity Index 500 fund generated a net realized loss of $19,000, but a massive change in net unrealized gain of $28,217,000. This highlights how the value of these underlying funds fluctuates, impacting the overall fund's performance. The total net realized gain from all affiliates for the period was a loss of $108,000, but the change in net unrealized gain was a substantial positive $829,210. This tells us that while there were some small losses on sales of affiliated funds, the overall unrealized appreciation of the investments within those funds was very strong. This statement summarizes the fund's income and expenses. For the 6 months ending the 30th of November 2025, the fund had investment income distributions from underlying price funds of $202,000. After deducting investment management and administrative expenses of $941,000. The net investment income was $107,900. The net realized loss on sales of underlying price funds was $108,000, and there was a significant increase in net unrealized gain of $829,210. This results in a total increase in net assets from operations of $83,892,000 for this half-year period. This clearly shows the power of unrealized gains in boosting the fund's value. This statement tracks the changes in the fund's net assets over time. For the 6 months ending the 30th of November 2025, the fund saw an increase of $83,892,000 from operations. Notably, there were no distributions to shareholders in this period. However, there was a substantial increase in net assets from capital share transactions, meaning more money came in from investors buying shares than went out from investors selling shares. This total increase for the period was $27,000,000, bringing the total net assets to $817,873,000. This inflow of capital suggests continued investor interest and positive sentiment. Alright, we're getting into the notes now, which are crucial for understanding the details. The fund is an open-end management investment company, meaning it can issue and redeem shares on demand. It invests in other T. Rowe Price funds, acting essentially as a fund of funds. The goal is long-term total return with a focus on capital growth and income, gradually becoming more conservative as the target retirement date of 2045 approaches. The report also clarifies the difference between the investor class and the I-class shares, with the I-class requiring a higher initial investment. This note explains how they value the fund's investments. Since the fund primarily invests in other T. Rowe Price mutual funds, which are valued at their net asset value, all financial instruments are classified as level 1 in the fair value hierarchy. This basically means their value is based on readily available, quoted prices in active markets, making them relatively straightforward to value. This is where we see the interconnectedness. T. Rowe Price Associates, the parent company, manages this fund and also manages all the underlying funds. This creates a situation where you are paying fees to an entity that also benefits from the performance of the investments it makes within its own family of funds. The report states that the annual all-inclusive fee ranges from 0.44 to 0.34% for the investor class and 0.26 to 0.19% for the I class, depending on the fund's asset allocation glide path. At the 30th of November 2025, the effective fee was 0.41% for the investor class and 0.24% for the I class, which aligns with the cost information we saw earlier. This is a standard disclosure about risks. It warns investors about unpredictable events like natural disasters, wars, geopolitical developments, and public health crises. These can all negatively impact the economy and the markets, and thus the fund's performance. It is a reminder that even with a well-managed fund, external factors can cause instability. This section confirms that the investment advisory contract for the fund has been approved, and the details are found in item 7, which we've touched upon. And finally, we have the signatures. This is where the Principal Executive Officer and Principal Financial Officer of T. Rowe Price Retirement Funds, Incorporated, attest to the accuracy of the information presented in the report. David Ostracher and Alan Nestupsky are signing off, confirming everything is in order as of the 16th of January 2026. So what is the big picture here for the Retirement Blend 2045 Fund? On the positive side, the fund is managed by a reputable company, holds a diversified portfolio heavily weighted towards equities for growth, and has demonstrated strong returns. Particularly in recent periods, the costs are reasonable, especially for the I class, and investor confidence seems high with significant inflows of capital. The fund's strategy of investing in other T. Rowe Price funds is a standard approach for target date funds, streamlining management. However, two key points stand out. First, the reliance on other T. Rowe Price funds means that the fund's performance is directly tied to the performance and management of those underlying funds, while they are doing well now. This is something to keep an eye on. Second, the related party transactions, while disclosed and standard in this industry, always warrant a second look. Investors are essentially paying fees to a single financial giant for both the overall fund management and the management of the underlying investments. Overall, for an investor targeting retirement around 2045, this fund appears to be on a solid path. It is structured for long-term growth with a progressively more conservative allocation as the target date nears, and the recent performance and asset growth are encouraging. The primary risk seems to be market volatility and the inherent risks associated with any equity heavy investment compounded by the fund's structure. But based on this report, it seems to be doing what it is designed to do. Alright, that is our deep dive into the Retirement Blend 2045 Fund. What do you think of this fund's strategy and performance? What are your thoughts on funds of funds? And is this the kind of investment you would consider for your own retirement goals? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more insights. And don't forget to join our Discord community linked in the description for discussions and more. Thanks for watching, and I'll see you in the next one.